Good morning, everyone. Scott G with the Simple Trading Life. Hope everybody is having a wonderful Wednesday morning. We're going live here just after market open. We'll do what we normally do. We'll take a look at ES to begin with, the E-mini S&P 500s, and then we will go over to TrendSpider, and we're going to look at some potential micro scalps on forex again today. I've had a lot of very positive feedback about that and folks wanting to know if I can do a little bit more of that. So of course we will. I try to take your requests and put them into practice. We did 2 days ago, we did the 1 minute. Yesterday we did the 2 minute. So today we'll do the 3 minute. We'll look at the 3 minute micro scalps on Forex, and we will go through some of the major pairs and we'll look for scalping opportunities. As normal, we're going to start on ES. We'll take a look at the broader market. And give me just a second here. Get you guys pulled up. Welcome to those of you who are already here. And I'm sure we're going to have some more folks joining us right where I typed welcome. You can put your comments or questions. But today, we obviously had some bigger players announced earnings this morning. They weren't very good, but so far the market has not reacted negatively. So let's make some adjustments here real quick. We have to get our opening price level marked, which is 32.20.50. So we just do this. And this will be our purple dashed line that you always see on my charts. So we know where price opened, and then we can watch that throughout the day. It usually will also act as a support or resistance area. And it's important to know, is the majority of the price action above or below opening price throughout each day. Okay, there we go. Okay, that's our opening price level. As you can see so far this morning, right, we're right here off of the 10 and it pushed higher. It's been pulling back so far. Now, if we go higher, let's extend this across. Give me 1 second. If we go higher, we know that this could be a potential area of resistance right up here. Okay, so we would watch that if price started to go higher, and let's squeeze this in so you guys can see. Okay, it's that level of structure right there. You can see what happened the first time we came up into it. Bam! Huge sell-off. And we sold off down to this trend line here. And this trend line, this was created when we had these 3 touch points. 1, 2, 3. Okay, and as you can see, when price came back down to it a 4th time, what did it do? It bounced off significantly. Okay, then it tried to come back down last night. It did make a lower low, but it did not make it all the way back down here yet. Okay, then price turned around, came back up to our resistance level at 32.21.25. We got a bounce, then we got through, then we came back to retest, and are we trying to go? Well, it looks like we are, but we don't know yet, right? So today is an FOMC day. That's at 2 p.m. Eastern time, and then they speak about it at 2:30. Typically, on these kind of days, the action is very muted throughout the day. It'll be usually pretty choppy. Okay, that's typical. And then once they release their news and notes of, hey, are we going to do anything to try to help the economy? Are we not going to do anything? What is their outlook? All those kind of things. Then sometimes you can see dramatic moves, right? Up or down. So if they come out and there's a bunch of negative news, we're not going to do anything. I'm just making something up, right? We're not going to do anything. We think everything is the way it needs to be. However, our forward guidance is that the economy looks to be heading into a recession for the next 12 to 18 months. and we'll make adjustments as necessary. If they would say something like that, I mean, obviously the market would just tank. They're typically not that dumb that they're going to say something like that, but you have to listen, right? You have to listen. Their words matter. Sometimes they'll just use little phrases that scare people. So they might use words like troubling, or I'm trying to think of, they're not necessarily saying, hey, we're heading into a recession, but they may say something like, the near term view of the economy is a bit troubling unless we do blah, blah. Well, just using that word troubling, sometimes seconds later you'll just see the market tank. There was last year, I can't remember what the word was, but they used a word that was a synonym for something very negative, and literally about 3 seconds later the market just plunged on one word. Because investors took that as, okay, this isn't good, the market's going to crash, blah, 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 and it plunged. Now, it wasn't a crash. This was well before the market correction. But just that day, the market tanked, right? And then it made a comeback later. So typically, leading into FOMC, you'll see the market just kind of chop and stay fairly muted, right? Whatever we end up for this opening 30-minute range, you might see price kind of stay fairly contained, right? Or here's what'll happen sometimes as well. And I've actually, over the years, I've taken some really good trades off of this. You'll see before FOMC, you'll see the market like start to slowly climb. And it will typically, about the time of FOMC, it'll get to a key area, maybe a level of structure, maybe a support and resistance level, or a supply and demand zone. And about that same time, the news will come out. And if the news, let's just say that happens, right? The market works its way up, and we get to be about 2:30 in the afternoon, and we're up in here, and something negative comes out. Boom, the market will drop. Or something positive will come out, and watch this. Here's what will happen. Market will been going up. It gets up in here. It'll release some positive news, and the market will spike. Okay, it'll spike, and then all of a sudden it will exhaust and drop significantly. And it traps all of those retail traders who were waiting for positive news. They get the positive news they want, and then big money turns around and takes the market down, and it traps all those retail traders. Or it can work the other way too, right? The market can slowly work its way down, and let's just say right here, let's draw a rectangle down here. I'll walk you through this because we want to know what this area is anyway, right? We would expect to see support down here in this area. Okay, so let's say it happens exactly the opposite. Throughout the day, it just kind of wanders its way down here. You get negative news, it plunges down, it flushes down, and then all of a sudden you get this big hammer, and then the market just starts rallying, just starts ramping, and it traps all the retail traders short. Okay, so you have to always know that it's not always what it seems, right? You got to know where you're at, right? Are you near some sort of support or resistance area? Has the market abnormally, like for no reason, is it going high? So that could be something today to watch for. I'm just saying, a lot of the bigger names who've already reported, they missed their earnings, right? There was a couple of companies that hit, but most of these bigger companies, Boeing, was it General Motors? I think it was General Motors. Anyway, some of the bigger names who've reported today missed, right? So if for some reason the market starts going up, that would be curious, right? That would be curious. Then if around 2 o'clock in the afternoon, we're up around here and we get some news, you would want to watch, whether it's positive or negative, you would want to watch. If it's negative, you may see a big plunge. If it's positive, you could see a spike, then an exhaustion, and then a plunge. So you just have to be careful. All right, we've got several people in here this morning, so welcome. If you guys are brand new, glad to have you, and if this is your first time, thank you for joining us. Make sure you smash that like button, give us those thumbs up, helps us with YouTube, helps us for YouTube to recommend us to other people. Subscribe to the channel and turn on that notifications bell. You'll always know when we go live. And if you haven't already, check us out in the Simple Trading Life community. Go to simpletradinglife.com and click on that free chat room button, and you can join us for free in our chat room. All our content is 100% free. So, okay. So as you can see here, not much is happening. We went up, could not, so far, we've not been able to hold above here, okay, right here. You see this wick? Earlier today, we weren't able to hold this one, okay, that's where it came back down, back to the 10. And then this is our opening candle, and we know what? The opening candle is its own animal, right? We say that all the time. Okay, it's its own animal. Like yesterday, remember all the whipsaw that we got on that original candle? It was like a $17.50 range, and it just whipsawed back and forth. Okay, so far today, almost all the action for this first 15, 16 minutes has been to the upside. Okay, so we'll keep an eye on it. In fact, let's set an alert right here at the top. So if it continues to ramp, we can come back and look at it. Remember, alerts are your friend, and then I'm going to put it down below the moving averages. So if we come down and take out the bottom of these moving averages, that's something we want to know to the downside. Okay, there we go. See, we have our alert set. So if the market starts to go strong one way or the other, we're going to know. If not, we may end up with an opening range where we can look at. Sometimes opening range breakout strategy might not be the best on an FOMC day. Okay, right, because why? A lot of times it'll chop and it'll just range until you get to 2 o'clock. Okay, but I'm not saying if you're an opening range breakout trader, I'm not saying you can't trade it. I'm just saying that sometimes it's not the best on an FOMC day. All right, give me 1 second here. Okay, just had a email I had to check on because it was a business email. So let me just quickly respond. It'll take 2 seconds here, and then we'll be right at it. All right. Already done. Okay, let me get back here. Back to your comments. Okay, so we've got a nice little group here right now. Okay, so let's go over to TrendSpider. All right, and I would say it's probably going to refresh. And we're looking at the Euro US dollar right now. And here we are currently. Obviously, kind of when I start on Forex, like when I'm in futures, I almost always start with ES, right? Because it is the market. When I start with Forex, I almost always start with the Euro US dollar because it's the most widely traded instrument in the world by far. Okay, so we're going to go to the 3-minute. A couple days ago we looked at the 1. Yesterday we looked at the 2. Today we're going to look at the 3. So most people who micro scalp, they're trading either the 1-minute, the 2-minute, or the 3-minute. Today we're going to look at the 3-minute. So just like yesterday, let's go ahead and look at our bigger picture. If you guys are brand new, we've been teaching, it was requested, so we've been teaching this week on how to microscalp Forex. Right? Now microscalping can work on anything, right? It can work on an equity, it can work on futures, or it can work on Forex. But a lot of microscalpers like Forex. Okay, so we're taking a look at that. So where are we at? Now remember, this is the 3-minute chart. Where is trend on the 3-minute chart? Okay, we came down, we obviously reversed, and right now, okay, it's to the upside. So let's scale out. Remember, we're looking to put a bunch of factors together, 4 or 5 or 6 factors that tell us whether something's a good trade or not. So where we're at currently, is price above or below trend? No. Okay, so that's an X. Remember, we talked about that yesterday. We're looking for check marks or X's, right? X's are negative, 3 strikes and you're out. So right now, it's kind of what I term tangled up in the moving averages. For those of you who may be new, this is the 10, the 20, and the 30 EMA, exponential moving averages. They are equal, meaning they're 10 apart. Okay, 10 plus 10 is 20, 20 plus 10 is 30. And that gives us a good, solid, smooth, when they widen apart, we know to be looking for if price is above for longs, if price is below for shorts. So right now it's tangled up in there. So that's 1x. Okay, now the trend has been up, but what is momentum doing right now? If we come down here, we'll draw it in. We make it easy, right? We draw it in. Okay, momentum has been to the downside. So far, we've been trending up. So that's another one that would be an X. Volume is up. Okay, we like that. We have above average volume. If we're above this black line, that's above average volume. This is relative volume, and this black line is the last 50 candles, the average of the last 50 candles. So we're above volume, so that's a check, right? That's only one, though. We have 2 X's already and 1 check. Let's see, what else? The 10 is above the 20 and the 20 is above the 30. That's a check. And let's see, what else am I forgetting? So right now, I wouldn't be super thrilled about anything long yet. But what we could have, right? What we could have is a move up, then a pullback, and then we may try to go higher. So let's scroll back out. Let's look. All right, if that happened, now we do have this big wick right now. If that happened, we would be looking, probably targeting right up here. Let's draw it in with our, I'm going to do it like this so I can move it. Draw this in with our rectangle tool. We would be looking at a possible resistance area up around here. I can scroll back out. You see that? Because price came up, we pivoted, and then dropped. So we had a rally, actually not much of a base, and dropped immediately. So that, we haven't been back to test it yet, that would be a potential resistance area. So now when we come back over here, we have to make some determinations. Right now we're trying to look, because the recent trend has been up. Right now we're only looking at long trades, right? So let's say that one of the next candles starts to go green, takes the top of this out. Let me look here. We got about 30 seconds left on this candle. Okay, so it takes the top of this candle out. We got other factors. You know, maybe we can put four or five other factors in our favor. Do we have enough room? If our stop was down here, we have to figure all this out before we enter a trade, right? Because we're looking for the highest probability trades. Okay, our stop would be about 6 pips. So if we go the other direction, are we able to get 3 to 1? Are we able to get 18 pips if we have a 6 pip stop? We're not, right? So up to here is only about 11 or 12 pips, right? There's 12 just poking in. So you've got a decision to make if that candle starts to go green, right? You have a decision to make. You know that the overall momentum is going down. You can see that down here, right? But everything else could be in your favor. That'd be the only thing against you. Now, momentum's big, though. Momentum's a big thing. But if you were going to have a 6 pip stop and you're trading at 3 to 1, if that's your rules, right? That's what I like. Maybe you're a 2 to 1 trader. If you're a 2 to 1 trader right up to here, that's 2 to 1. There's 12 pips. Let me get it again. There's 12 pips right there. I'm going to mark it. The point of this would be 12 pips. Okay, you see it's starting to go green. So if you're a 2 to 1 trader, then maybe this is a trade that you would like. If you're a 3 to 1, you might be more, I don't know. All right, so see, here we go. Okay, let's see. Are we taking it out? The high over here was 1753.5. We're at 1755. Yes, so we just took it out. So if somebody's a 2-to-1 trader, everything else is in their favor except momentum. Momentum has been to the downside. But right there would have been your trigger. Your stop would be just under this candle right here. Okay, so you'd have about a 5 to 6 pip stop. Now we're going to see how this trade plays out. All right, now this would be for somebody who's only looking for 2-to-1. See, we got a few more people that are joining us. Welcome. Talking about micro scalping. Today we're on the 3-minute chart. We did the 1 minute, the 2 minute, and now we're doing the 3 minute. We did the 1 minute a couple days ago, 2 minute yesterday. We're doing the 3 minute chart today. Those are what typically most people micro scalp on. So we're analyzing a hypothetical trade here on Euro USD. Okay, we would have got triggered in on the break of this candle here. And why? Let me walk through the factors. Because you see this wick was above here. So price was above the 10, the 20, and the 30. There's a check. Overall trend is up. There's a check. Above average volume. Okay, anything above here, there's a check. If you're a 2-to-1 trader, is this giving you the potential for 2-to-1? It is. There's a check. The only thing that we can find negative right now is that momentum has been to the downside, right? So we sort of have a negative divergence here on the momentum. But all the other factors were, check marks, right? Were check marks. Okay, so we just started another new candle. Make this a little bit bigger for you. In fact, I'm going to go ahead and get rid of this because we know if we get here that it is a 2-to-1 winner, right? If you were a 3-to-1 trader, this is probably not a trade you would take. A 2-to-1 trader, possibly, right? Okay, now you see it's coming back. It's retesting the 10. We're going to let this play out. Remember, your stop would be right under here, about 1 pip under this candle. Now, some people may put their stop clear under all the moving averages. That's a common thing too. If you did that, you would not take this trade though, right? Because there's no way you would get even 2-to-1. And if you're not getting at least 2-to-1, I wouldn't take the trade. I would not take the trade. Okay, so we're watching it again. The entry would have been on the break of this candle. Okay, so this was the next candle. Now prices come back. It's just testing the 10. We're looking down here. You see the volume on this candle. Now it's starting to increase a little bit. See, the volume on this candle, it went up pretty quickly. Okay, it went up pretty quickly. It became above average volume fairly soon. This one's taken a little bit longer. Still got about 1:20 to go on this candle. So we're watching this. Now, obviously, if this is a trade you were actually taking, all you'd have to do is set your stop and your take profit target, and you could go on and start looking at other trades, right? When you're micro scalping, you may be involved in 3 or 4 or 5 trades at once. Now, I don't like to do that. I typically, I'm going to be in 1 or 2 at any given time, but there are a lot of guys who micro scalp. In fact, I was just watching somebody this morning. I was doing my walk this morning, and I'm always either watching videos or listening to audiobooks or whatever. But I was watching a guy who loves to micro scalp, and he typically said he's in about 4 to 5 trades at a time. Okay, that's what he enjoys. All right, so far you see we came back. We're bouncing off of the 10 here. We'll just watch this. We've got less than 20 seconds to go on this candle. Obviously, we are watching in real time. We're just going to see, kind of how this trade plays out. Oh, one of the factors that I missed, besides the fact that this is an uptrend, was that they were widening. Once they widen, as long as they stay apart, right? As long as they don't start coming back together like this, that's a good sign. That would be a check mark. All right, so we did, as that candle closed, we barely, again, got above average volume. Okay, you see this? So the only thing out of all the factors that we look at was momentum. But momentum is a big one. You know, just keep that in mind. Knowing where your momentum is, that may signal, right? And that's not to say that we can't achieve 2 to 1 on this trade here and then it roll over, right? That's very possible. Because when you have a negative divergence, okay, meaning price is moving this direction, momentum is moving that direction, that typically signals that a turn is about to occur. And it can be exactly the opposite, right? If price is moving down, but momentum starts to change and move up while price is still moving down, that typically signals that at some point you're probably going to see a turn and price go the other direction. All right, so we're just watching here. Obviously, when we did the 1 and the 2 minute, they happen a little bit quicker. The 3 minute takes a little bit longer to play out. We'll watch it a little bit more, and then we can always like go look at some other pairs and come back. So we'll let this candle close, which will be a minute and a half. We'll see what it's doing, and then because again, our right down here is where our stop is. So once we're in the trade, unless it comes all the way back down here and takes us out, okay, we're still in the trade, right? And it may take a little while to play out. Okay, it could. So if it plays out, it'd be a 12 pip winner at 2 to 1. Okay, if it does not play out, it would be a 6 pip loser. And then how do you calculate what you would have made or lost? It depends on what you're playing. Standard lot, you know, typically you're going to make $10 a pip, so 12 pips would be 120, or minus 6 pips would be minus 60. Okay, so it's that easy. All right, we got just over 30 seconds to go. Again, we're getting above average volume. We like that. See this here? We're already above with 30 seconds to go in the candle. We're already above average volume. And it's trying to move up. And then another thing you can do, right? If you like to manage your trades, some people do, some people don't. Let's see here. That's 50. Let's say 54. So 6 would be 60. Let's find 60. All right. So there, that would be halfway. And really, we just touched it. You can see if you look over, we touched it. See right there, okay? If you like to manage your trades, which I do, when you get halfway, you could take your stop here and move it about a pip into profitability, which means there's no way you can lose on the trade. The only thing you could do is break even. All right, that's called managing your trade. Right, so that is something that I like to do. Price moves 50% of the way to your target. Move your stop slightly into profitability, which is still giving you room in case it goes a little bit red, and then goes up, right? But if it all of a sudden goes big red, like something like this, you're going to get stopped out, and actually you're going to either break even or make a tiny little bit of profit, but it's not a loser. Okay, so let's just assume we did that. Now, not everybody does it. Some people never move their stops, especially when they're micro scalping, because they think, you know, there's no reason for me to move my stop. I typically, if I can stop myself from going red at all, I like to do it, right? But you got to have rules. So that's one of mine, right? If I get up to 50% towards my target, I like to move my stop up just above where I entered. All right, so it'd be somewhere about there. You can probably see that dotted line going across. Okay, so I'm going to leave it there just in case. And I was going to go look at something else, but you know, right now we're kind of talking through how we manage this trade. But you see the 3 minute obviously takes a little bit longer to play out, unless all of a sudden we get a spike up or down and takes us out or hits our take profit target. Okay, all right. So it's trying to push up again. Watching this all in real time. There we go. Got about a 2 pip spike right there. Let's see if it keeps pushing. All right, there's another pip. And how do I know it was another pip? I'm watching over here. It went from 1.7 to 2.7, so that's a pip. Let me come back down here. Okay, then it just moved 0.4 of a pip. So we're all watching this play out in real time. You see where we got? Look at this. Okay, right there at the top of this big wick, which that can act as some resistance. When you're micro scalping, everything plays out the same, just like when you're watching something on a higher time frame. But sometimes you can get through these wicks a little bit easier, because you got to remember this was only a 3-minute candle. Okay, but we're going to see. All right, let me get back here where my stop would be now. Okay, so we got a spinning top on that last candle. So we came down, then we pushed up, then it came back down again. Volume still above average, Anything above this black line. And notice how the black line is sloping up. That's because so many of the candles in the last 50 have been above average. So now that average is going to climb, right? Because it's the average of the last 50 candles. Okay, while we're waiting on this, let's go back and take a look at ES. Okay, here we go. ES is almost up. I saw my alert go off, but we were managing our trade. Okay, ES is almost back up to this level of structure. We're almost up there. Okay, here was our opening candle, our opening range. I'm not going to draw it in today, but let's just see what it was. It was $29.25. It was $9.25. So as you can see, way smaller than yesterday. Yesterday's opening range was $17.50. Today it's only $9.25. But if you're an opening range breakout trader, you would draw your rectangle at the high and the low. You'd be breaking out right now. Okay, but what would be your concern breaking out to the top? Well, level of structure right here. Okay, here's what happened when we tested it the last time. Big drop. Okay, big drop. So you just have to be careful. Just have to be careful. Let's do this. Let's set an alert right up here, which will tell us if we get into the level of structure, because we still have our alert down there at the bottom should price just all of a sudden start to tank to the bottom. We still have our alert here. That's just about a tick or two into this level of structure. Now we can go back, continue to manage our trade. As you can see, okay, everything is still working, in our favor. We'd moved our stop up just above where we entered. That's that little dotted line going across where my cursor is. Our target, our take profit target, is just to hit this zone. And that would be exactly 2 to 1. Okay, that would be exactly 2 to 1. And we moved our stop about a pip above where we entered, because that way, should price reverse, it's just basically going to be a break-even trade. We didn't lose anything. That's managing your trade. So if you're a micro scalper throughout the course of a day, right, you might take 10 or 15 trades. So if you can keep every loss, let's call this a loss if it comes back down and would stop us out, if you can keep them around break even, well, then that's not even really a loss, right? It wasn't negative. You just didn't maybe hit your take profit target, but you didn't lose money. That's called preserving capital. Preserving capital. Okay. Now this last one you see got right up to the average. Right up to the average. That's red is selling volume, green is buying volume. So we're just watching here. There's our stop in case it would start to come the other direction. But you can see when you manage a trade, all you're doing is protecting yourself, right? Why wouldn't you do that? Why wouldn't you protect yourself? The people who don't protect themselves are the ones that make it a lot harder to make consistent profits. I was trying to think who it was. There's a famous It's not Mark Douglas, although he's a big proponent of obviously protecting your capital. There's somebody else who's a big trading psychology guru. Obviously, Mark Douglas has passed away, who said the number one thing in trading is not making money, it's protecting money, protecting your capital. Because if you have a good strategy that gives you an edge over the market, as long as you follow your rules every single trade, right? I said that yesterday. I try to hammer that home to everybody, every single trade. If you follow your rules and you have an edge, if you protect capital, there's no way you're not going to make money. Okay? But as human beings, we make the mistakes of trying to change our rules or manipulate or have a bias or, hey, we think something's going to happen, instead of just looking at what price action is telling us, putting all these factors in our favor that increase the odds of success, and then letting them play out over a wide range of trades. That's how you become consistently profitable, and literally, you could become wildly successful. Some of the best traders that I know personally, and some that I just know of who are what we would call wildly successful, they trade so conservatively that it's just not sexy. So that's why some of them don't get a lot of hype. Do you think they care? Because they're putting bank in their pocket every single day, every single week, every month, and every year. They could care less what people think, right? You guys, a lot of you probably follow Steve Burns on Twitter. He's a guy that he puts out tons of little snippets of trading psychology, trading education. He puts out charts all the time. I think his website's called New Trader U, something that to that effect. But he regurgitates a lot of his stuff, and it's good stuff. He always puts out, good trading is boring. Good trading is boring, right? So like I said, some of the most successful people that I know personally and know of, the way they trade is not sexy. They're ultra conservative and they follow a rules-based strategy to the letter. They do not deviate. Okay, whatever it says, whatever strategy they're playing, they do not deviate. So they just let them play out over and over and over again. And again, even I said it yesterday, even if you're only a 50% trader, meaning you win 50% and lose 50%, if you have at least a 2-to-1 strategy, you can make prolific money over the longer term. But it's not as long as you think, because your money will start to compound, right? So if you had a starting account of $2,000, right? And now at the end of the week, it's at $2,500. Okay, well, you can start to slowly increase your position size without increasing your risk. At the end of the next week, maybe it's at $3,000. I'm just making this up. Okay, again, you can start to increase your position size without increasing your risk, and so on and so forth, and then that's how it works. And then it starts to grow faster and faster and faster. Those guys who make the big money, that's what they figured out early on in their careers. Well, maybe not always so early on. Some of them before they figured that out blew up several times, and then they figured out, oh, this is how I make money. I make it systematic. I use a process. I keep it boring. All right, so look at this. See how we got up here again to the top of this and still have not been able to break through. Okay, now we're coming back down to the downside. Let me get so this dotted line down here where my cursor is, let me show you. Right there. If we hit that, we're out of the trade at break even. We're out of the trade at break even. So let's see. We're getting a lot of downside momentum, and there it is. It hit it. So we would have stopped out of this trade. We got close, right? We got close, but we would have stopped out of this trade break even. But you see how managing the trade, everything else except momentum, but you see how important momentum is? So look, When momentum got back up here, remember we entered the trade right here, so look down. See where we were? Momentum came back up, hit the trend line, and then all of a sudden, boom, big fall down. Tammy, have absolutely no reason, but again, we're using RSI as momentum only. We do not use it as designed. We're not using it for oversold and overbought. I have nothing against MACD, right? MACD is a great indicator just on its own, the way it's used. There are strategies out there that use MACD in conjunction with other things. For this particular strategy, the RSI used as a momentum indicator seems to work better. I have fiddled around with MACD. I've fiddled around with stochastics. When I say fiddled around, that's my vernacular. Tested, right? I've tested with MACD. I've tested with stochastics and a couple of other things. And this RSI momentum indicator seems to work best with this strategy, right? I have nothing against MACD. There are other strategies where MACD works better. Okay, so MACD works better with other strategies. But overall, as designed, I don't like RSI at all, but I do like it as a momentum indicator. All right, so you see what happened. We fell. We're now bouncing. Yes, yeah, and that's what we're working on. We're working on microscalping. And obviously, I don't know, Tammy, if you got to see Monday and Tuesday, we did the 1 minute and the 2 minute. We can easily identify great opportunities, easily. Now we're getting a bounce right here. Now somebody may say, where could I re-enter, right? If you want to, where could I re-enter? Well, because this has now, the distance has closed, I'm no longer interested in this. I'm not. And that's not to say that this thing might come up here, hit here, kind of bounce down a little bit and go right on through. It's possible. But again, the momentum is still to the downside. If I extended this, let me extend this. Okay, overall, momentum's still to the downside, which is telling us at some point, okay, the price may turn around and roll over. So we'll come back, right? We've spent a lot of time here. So let's go through, and today we're doing the 3 minute, and let's do some analyzing just like we did the last couple of days. All right, so this is the Aussie yen. So we scroll out, get our wider view on the 3 minute chart. See this? 3 minute chart. Okay, we're slowly moving to the upside. That's our overall trend. Where are we at currently, right? We're going to start going through the checklist. Well, right now we're tangled up in here. We're not above or below the moving averages. So that's an X. Okay, let's look at volume. Well, volume has been above average. That's a check. Are the moving averages widening? No, they're actually coming together. That's an X. So now we already have 2 X's. Is momentum up or down? Okay, on the longer situation, it's down, right? But trend is up. Okay, so that would sort of be an X or at least a neutral, right? At least a neutral. Okay, so we said, are they widening? No. Price is not above? No. Trend is not up? No. And now volume has been above average. So we gave that one a check, but already there's enough going against me. I'm not interested in this one right now. Okay, so we go right on to the next one. Aussie New Zealand dollar. Scroll out. Okay, bigger picture. We've been moving up, but then it looks like we may have rolled over up here, right? Coming back down. We look for tests. You see this? See how it tested right across there and rejected? Looks like it's trying to put in a lower low. Okay, shorter term trend is what? To the downside. That's just informational. Is price below the moving averages? Yes. Check. 10 below the 20, below the 30? Yes. Check. Above average volume? Yes. Check. Momentum to the upside or the downside? It's to the, always go back just a little ways, right? Okay, right now it's to the downside, check. Okay, right? So we're putting all of this together. Are they widening, or at least have they widened and they're staying apart? As of now, they are, check, right? So we're putting all this into our favor, and look what just happened. Okay, we have price coming back to retest. When do you want to enter when you're in a trend? Okay, I've said this the past 2 days. You want to enter after a pullback. Look, we come down, we pull back. Look at this nice hammer, or excuse me, shooting star we got. All right, so then you would be looking at an entry once you get back below the 10. Right, now we're getting a pullback again to the 10. So we would look for a reason to go short. Let me move it higher so you guys can see it. All right, so now we would look for a reason to go short because we got another pullback. So here's our high. So we went lower low, lower high, lower low, lower high, lower low. Then we put in a higher high, but then came back and put in a lower low. So until we start to see higher highs and higher lows, right? The trend is what? Still to the downside. Still to the downside. So we could be looking for trades to the downside. Now let's come back over here. Where would be an area that we could possibly see, because we want to look for targets. Let's draw a line right across here. Okay. And then I have to pull this up a little bit. And then right across here, we're looking for potential targets. Actually, I would want a rectangle on this one. This one would look something like this. And that should be green. And then down here, we would want another rectangle right here. Pull it down right there. Okay, so whoops, I don't know why it didn't. Give me 1 second there. There we go. All right, now I can come back out. So if we were to take a trade to the downside, now we got to get our ruler. Okay, even though we're micro scalping, do you see how much is involved in this? Let's just say we took a trade if it takes this candle out. Okay, to our first, that's only 4 pips. That's not great. Okay, to our second level of support, it'd be about 7. And then to our third, it'd be about 11. So, come back up here. If price would turn around and take this out and you're going to say that's an entry, this is not a great risk to reward trade to this level. Let me show you where that's at. Okay, see how price came up here and sort of based right there? See the closes of and the opens of the bottoms of these candles right here and the tops of these? You see how they're all in that same line and then it went up? Okay, so this is an area that could act as support. Now, if it was to break through there and you got down into here, that's still only giving you 7 pips, right? 7 pips. That's not fantastic. It's not that you can't, right? I know guys that only look for, 5 or more. Hey, if they can get 5 or more and they can do that 10 times a day, there's their 50 pips for the day. And that's what a lot of micro scalpers look for, is about 50 pips. If they get anything over 50, they think it's a great day. All right, so price came back up again. So you see, we came down, we've bounced. Are we going to start to come lower? Now, if we start to come lower, again, we're not really interested unless we can take out the bottom of that candle. That doesn't give us much risk to reward here or here because our stop is probably going to go above here. So if we enter here, let's just do the math. 7725. And if our stop's going to go up here, it's 7762. So that's almost a 4 pip stop. So we definitely wouldn't take it going here. And just to get 2 to 1, it's 7 pips to here. If we take this out, remember, down to here it was 7 pips, down to here it was 11 pips. So 4 times 2, if you're only looking for 2 to 1, would be 8 pips. So you'd have to get into here a little bit. If you were going 3, it's 12 pips. Well, it's only 11 pips to here. So again, is it something that I'm really excited about getting into? No, I'm not. All right, so I would move on to the next pair. Remember what we talked about yesterday. Those of you who were here yesterday, we don't want to take garbage trades. Okay, and what's a garbage trade? That means we're taking it just based on a couple of things and we think it's going to move or whatever. We want to take the best trades. That's how you make money. All right, so let's take a bigger look on the Australian US dollar, the Aussie dollar. Okay, a lot of sideways here, a lot of sideways on the bigger picture. See that? In the shorter term, it looks like we put in a double top. Just take your time here. Don't worry about missing trades. Okay, see what we mean by a double top? Now, what do we know on double tops? If we take this out, we're likely to get back to the origin of the move, which would be down here, right? Which would be down here. So let's start putting some other factors together. Let me just draw a line. Well, really it should be like this. Okay, that's where you'd be looking to get at if it starts going the other way. Now, right now, this is a green candle. That doesn't necessarily mean a whole lot right now. So let's scroll back out. We know that this is a key area. We'd have to get below here and then look over here. We also have some confluence over here. So let's draw it in. Remember, you don't want to be in a hurry just because you're micro scalping. You don't want to be in a hurry. You want to put stuff together to know, okay, is this a good trade or is it not? Okay, so if we look from here, look at this. Up, back down, back up, back down. Right now we're chopping. So we would want to see this break. Now I'm not saying you can't get into the trade ahead of time, but you got to know, okay, we're reversing. Is price below the trend? Yes, check. Are the EMAs in the right order for a downside move? No, that's an X. Okay, right? See, this is the 10. The 10 and the 20 are not below the 30. Right? But that doesn't mean that we can't change very quickly. So maybe our entry does end up being down here. If we can take this out and then these start to turn in our favor, okay, because right now we're not necessarily looking for anything to the upside. You know, we'd probably be more interested in a downside trade, but our moving averages are not where they need to be because we're looking to take the best possible trades. All right, what's momentum doing? Remember, just go back a little ways. You want the overall flavor of what momentum's doing. Okay, it's to the downside. That's a check, right? We already know that we had a double top, which is a common reversal pattern, right? So here's our one top, here's our second top, our double top. Now if we come down and if we take this out, we know it's highly likely that we'll eventually get back down here. Let's take our ruler. Okay, we're doing some hypotheticals here. What would that give us? That would give us almost 11 pips. Okay, almost 11. Let's see, right there's 11. So just into that would give us 11 pips. So that's important to know. Let's leave it there. Okay, so we know if we come down here and break this, depending on where we would have to put our stop, okay, that would be crucial. We know that down to the origin of the move, which is this pivot here, see this? Which is this pivot, and then we came up. That's how we know it's the origin of the move. We came from above, we pivoted, and then we never took it back out. We went all the way up. We double topped, and now we're looking to see, are we going to come all the way back down to here? All right, so we're just putting the information together. Are we ready to enter this trade right now? No, we're not. But we're already building the case that if we get down here and we take this out and our stop makes sense, this could be a place that we enter. Right? This could be a place that we enter. Look at this. Okay, look at it. We have above average volume. Right? Now our moving averages are starting, right now they're flattening, but they're turning to the downside. If they cross and start to widen, then we're starting to look better, right? Then we're starting to look better for a downside trade. So let's just stay here for a second. We'll watch this. We will look at some other pairs. Okay, while we're waiting for this, let's go back and take a look at ES just real quick. Okay, there we go. So ES got up here. Okay, and right now it's pulling back just a little bit. Got right here into our level of structure. That doesn't mean that it's going to totally reverse right now. We don't know that, right? We don't know that. Okay, if you were micro scalping, or I shouldn't say micro scalping, you'd be scalping because this is a 30-minute. If you were scalping ES, look at where your entry. Look at this J hook. See that? That's a beautiful J hook. Came down, held the 10, slingshot right back up. Here would have been your target, the bottom of here. Your entry would have been taking out this candle right there, the top of that. So let's kind of see what that could have produced. 32.2350. So you would have entered at 32.24, and then as soon as you hit this, that's 32.32, 8-point move. 8-point move. So on a standard contract, that would have been $400, and you would have had it in a little less than an hour. Okay, $400 on a standard contract in a little less than an hour. Okay, and then we pulled back a little bit. Looks like it's trying to push higher. But we'll see, right? Could end up being a resting candle. Okay, we could see something like this over here where it pushes up in here and then rolls over and comes back down. But we'll just keep an eye on it. All right. Oh my gosh. So there we go. Okay, there's the break, and we have the 10 below. We have above average volume, momentum to the downside. Okay, we weren't watching when it broke. That's my fault. We went over there. Okay, this would be, they haven't started to widen yet, but we know the momentum is strong to the downside. Where would our stop have to be? Up here. Okay, so that is 7, let's say 9. And then here is 5. So that's a 4-point stop. 11. Okay, it would give you 2-to-1, but it wouldn't give you 3-to-1. All right, but look at this. Look, what did we just say? What happens on a double top if you take the bottom of the V out? You're highly likely to get back here. Now let's see if we do, right? It might not happen on this candle, right? It could even come down here, bounce back up a little bit, and then come back down. But your stop would have been here. I apologize that I went over to look at ES. Now look how everything's starting to widen. Okay, so your entry would have been here on the break. Your take profit target is down here. That's for almost 3-to-1, right? 3-to-1 would be 12 pips. This is 11. If you're only going for 2-to-1, you only need to get 8 pips. So let's see where that would be, just so we know. Let me come up here. We're looking for 8. Where is 8? Right there. Okay, so 8 pips is right here. So if you're only looking for 2-to-1, you only have to get to right there. If you're looking for 3-to-1, you got to get 1 pip further than the point of this candle. Okay, so our stop is up here, right? Now, did we make it more than halfway? I'm going to say we did. Let's look. Okay, 575, and we made it to 68. So that's 7. Yeah, we made it more than halfway. So in that case, what do? Right? We move our stop to just under where we entered because we made it more than halfway. So it'd be about right there. Okay, just under where we entered. Now we know, again, even if price comes all the way back against us, we'll at least be break even. We would at least be break even. Okay, now we're watching to see what's going to play out here. Again, we're on the Aussie dollar. And if you're looking for 2-to-1, Right here is where you would take profit. If you're looking for 3 to 1, you would actually be just a little, you'd be 1 pip below this, because this is 11, you'd have to get 12. We originally had a 4-point stop, right? And then because we went over halfway to our profit target, you move your stop just into profitability to protect in case you get a bounce against you, just like that original trade, right, this morning. It went our way, it got within a couple of pips of our target. Now, could you have exited and taken that? Sure, right? That's totally up to you. It's never wrong to take profit. Don't let people fool you or try to convince you that taking profit early is a bad thing. It is never wrong to take profit. I'll say it again. It is never wrong to take profit. All right. So now, again, we're looking for 2 to 1 winner. You got to get here. For a 3 to 1 winner, you got to get 1 pip below this. And then your stop is up here. Okay, and all our indicators are still going our way, our factors, I should say, right? This is starting to widen. Price is below the 10, is below the 20, is below the 30, above average volume, momentum. Momentum's not only to the downside, it's been strong to the downside. Okay, it's been strong to the downside. So we're just going to watch. We're going to let it play out. Obviously, again, it takes a little bit longer on a 3-minute compared to the 1 or the 2. I personally, I think I said this yesterday, I personally, if I'm micro scalping, I kind of like the 2. That's sort of my favorite if I'm micro scalping. The 1 obviously happens really fast, okay? And sometimes people can get a little spooked. The 2 is just a good, to me, it kind of smooths everything out. But one thing when you are trading in any style, whether you're swing trading, scalping, day trading, or micro scalping, you cannot get emotionally attached to any trade. None, right? None. Those of you who have read Trading in the Zone by Mark Douglas, okay, that's one of the things that he absolutely preaches on, is you cannot be emotionally involved in any trade, right? What does he say? His terminology has something to the effect of the only thing that you should expect on any single trade is that something will happen. You don't know what. Now, if you're putting an edge in your favor, right? If you're putting an edge in your favor over a wide range of trades, you should have an edge, and you should know that you will be, like a casino, you will be profitable. But any individual trade does not matter, right? And if you're managing them correctly, right? Because where's our stop on this trade? Our stop's right there, okay? Just like that first trade. That first trade, it came back and hit our stop, but we had already moved it into slight profitability, which basically breaks us even. Right? So why should I have any emotional attachment to the trade? Why should I have any emotional attachment even if it stopped me out for a small loss? Again, you only have to be 50% if you're at least 2 to 1. If your risk to reward ratio is at least 2 to 1. Okay? So we're just letting things play out. Nice group today. Nice group we have here. Okay, we're on the Aussie dollar. We're in a hypothetical micro scalp right now. We've already moved our stop into slight profitability, so at worst, we're going to break even. And then we know these 2 arrows, again, this would be a 2 to 1 take profit, and down here, 1 pip below this would be a 3 to 1. I like to go for 3 to 1. That's myself. But I manage my trades also. You know, so I told you, once it moves about 50%, I move it into slight profitability. Once it moves, if I'm going 3 to 1, once it moves about 75% of the way, I typically then move my stop to about 50%. then I know that the least I could make would be like 1.5 to 1, even if it reversed against me at that point. That's just how I like to do it. That doesn't mean you do. Again, there are people who micro scalp that never move their stop. So they would just leave their stop up here, and the only way they're going to get stopped out is if price comes all the way back and gets above that candle right there. That's the only way they would get stopped out. Okay? And then there's others that are like me. They have rules for when they're going to move it, and I like to move it slightly into profitability, which means I'm going to at least break even, if not make a minuscule amount. But again, break even or a little bit of green is better than any amount of red. Okay? What happens, let me kind of put it to you in a more logical way. Hang on a second, I got to stretch, my back is stiff. I need a more comfortable chair. Let me put it to you in a more logical way. So I've already told you that you only have to be 50% winners, 50% losers, if you're 2 to 1 to make a great amount of money over a wide range of trades. Right? And if you're 3 to 1, it's even better. Just means you're going to make money quicker. What is the advantage of moving your stop into just slight profitability or break even? It's not a loss, right? So when we're talking about that 50-50, it's almost like a no trade, right? It's almost like a no trade. Okay, and we just got stopped out right there. All right, we just got stopped out. See that? But it wouldn't have been for a loss. So basically, I would have taken 2 trades so far, and you can do this 24 hours a day when you're micro scalping forex. But I wouldn't have lost anything, right? Because I move it about 1 pip into profitability, which basically makes it a break-even trade. Now look down here, look how the momentum is starting to turn, but let's see, does it ever get above here? If it does, right? If it does, then price is probably going to continue up. Now, for those who don't move their stops, okay, they still haven't been taken out yet. But if they do get taken out, they're going to be minus 4 pips, which would, if you were a standard lot, would be minus $40. Whereas my rules, I'm break even. 2 trades, no loss. I'm still right, let's say I started with $2,000, I'm still at $2,000. Okay, if somebody who had, never moves their stop, and let's just say, I'm giving you a hypothetical, it comes back and does stop them out, well now they're down $40. All right, so then they're at $1,960 instead of $2,000. And the goal is to build your account, Okay, now it is starting to go lower here. Okay, but let's look at some others, all right? Let's just say we followed my rules. We got stopped out for break even. Let's go to Euro Pound. All right, bigger picture. Okay, bigger picture was we were in a strong downtrend. It reversed on what? A hammer. Look at this. See that hammer? Okay, reversed on a hammer, started back up. So where are we at in the shorter term? We're to the upside. That's informational. Is price above? It is. Pull it down so you can see it better. Is price above the trend? It is. Check. Are the moving averages widening? They are. Check. Are we above average volume? I would say no, right? 3 candles in a row. Now this one may end up, but 3 candles in a row we hadn't been. So we're going to say an X. That's only our first X. Where is momentum? Okay, well longer term, it's flat. In the very short term, it's to the upside. Okay, and we'd be looking for long trades. So I would say either that's neutral or maybe a check. Where are we at in the move? Is the move starting to get extended? It is. So that is not necessarily an X, but it's a take caution. Would I want to enter now? No. Where would I want to enter? On a pullback, right? All you got to do, look at recent price action. This is how you know. See, when it gets extended, it pulls back. You want to enter down here. Okay, it gets extended. What does it do? It pulls back. You want to enter when it kind of takes out here. You see this? You see how all these candles were kind of stopping in the same area? You want to enter when it takes them out. Okay? Gets extended. At some point, it's going to probably pull back. See how that works? So your entries, you want to look for entries when price pulls back. Let's look for some potential targets based on where we're at. All right, now look where price is it sort of was stalling, was right there. Now it's trying to push again. Up here would be a level, let me draw it in, that we would want to keep an eye on for a potential area that it could stall out or even reverse right there. That needs to be pink. Give me a second. All right, we're almost up to it. And let me come pull it down. Okay, here would be a level right there. So what you want to do is you want to draw these in. Now, is it going to stop at every one of these levels or any one of them? You don't necessarily know, but you got to know the laws of probabilities, right? And then again, when you get up to the top here, okay, I'd maybe just draw a line up here, right across there. Whoop, pull it down, right there. Okay, so there are some potential areas to the upside that could act as resistance. We're starting to get into one now, right? We had this drop, we based, and then we dropped again. This is on the 3 minute. This is on the 3 minute. All right, but I would not try to jump in now. Where would have been the place to enter a trade? Okay, there was a couple different places, right? Here, okay, here I would have been looking right across there. Now, why am I picking that? I'm going to show you. Let me draw it in. Why not the top of this? Look where all of these previous candles had stopped. Okay, all of the bodies, it was only this one little wick here. Okay, but this wick stopped, this body stopped, this body stopped, all at this same level. So now when we go and take that out, I feel confident putting a stop down here. I'll just show you where my stop would be. I'll draw it. Putting a stop right just below that wick. Whoop, why won't it go down? There we go. Okay, my stop would be here. My entry would be there. And then we already know that up here is an area of potential resistance. And look what it did, right? Look what it did. It went right to it and then it pulled back. Okay, so let's look. Would that have given us, I mean, eyeballing it, I'm going to say yes. But would this have given us a 2-to-1 or 3-to-1 trade? There is 10 pips, okay? And our stop would have been, I'll just use the ruler, it'll make it easy. But eyeballing it, I know it would have given it to us. Oh, that went up too high. Well, let me just stop right about there. Okay, it's really only going to be about a 3-pip stop. Okay, so this is about a 3-pip stop. So 3-to-1 would be 9, right? So if I know this is the next area of likely resistance, which it was, I know that I can take that trade. And my entry would have been right across there because I just showed you 1, 2, 3, 4 candles in a row. That was resistance. And then we broke through, right? You put your stop down here, never comes back, right? Never comes back, climbs, comes down, climbs, and hits it. So 3, 6, 9, 12, 15, 18 minutes, and you make, well, to there you would have made 10 pips. So that would have been times 10, $100. 18 minutes, you make $100. It pulls back, right? Now where are we looking at entering? Let me show you. Again, come right across here. Why? 1, 2, 3, 4. Now it kind of come back, hooked around. Okay, we had 4 candles right in here. You could even move that up just a bit, right there. Okay, so 90555. There's your entry. And now we know that this had been resistance before, right? So where would we put our stop? We would be putting our stop below this candle. Just talking you guys through everything. We'd put it just below there. Okay, so that is, again, that is a 3 pip stop. 3 pip stop. Now, what are we targeting? We're going to target right up here. Let's see what that would give us. Okay, it would give us about 12.5. So, yes, we would make our 3 to 1, right? Definitely make 2 to 1. You could make your 3 to 1. And look, it's still going. It's still going. For those of you who don't look to exit until it comes back, look what we're doing. Let me pull it down. Look what's going on now. It's way up here. It's still going. I don't know if this will, yeah, no it won't. I'd have to stretch it. It's already up 22 pips. Already up 22 pips. But I'm just showing you how to calculate the safer trade. Here would have been your entry, 3 pip stop. 9 pips is all you need to get 3 to 1, and it was 10 pips to here. Right? So that you could have either exited there or you could trail your stop up. Remember, we get halfway there, we're moving our stop just into profitability. We get 75% of the way there, we move our stop up to 50%. You could just keep doing it. If it goes another 25%, you move your stop up another 25%, and so on and so forth. You could just keep manually trailing it right on up. It's still going. Okay, and we know, look, here's our next level. Here's our next level. Let's see if it would make it up there. That is 28 pips. You just know where they are, and you keep moving your stops. So if your stop's here, then maybe now your stop's here, right? And if it gets up there, okay, you can maybe move your stop up to here, and so on and so forth. Okay, look at it. Man, is it going. Look at this J-hook. Woo, boom. See it? Look at that J-hook right there. Slingshotting that thing up. But at some point, you're going to run the risk of exhaustion. So I wouldn't be greedy. I wouldn't be greedy. I'd already be out. I'm just telling you. I would already be out. I would not be trying to get greedy. If it hit this, I would definitely be out. But I would have already been out. I'm just telling you right now. Okay, I would have probably either exited here or trailed it up. It did look like it had some good momentum, but remember, that was red at one time and then it blasted. I probably would have been out there, 10, 11 pips. Okay, that's going to happen, right? But that's over 3 to 1. If you keep doing it, 3 to 1, 3 to 1, 3 to 1, and then you have an occasional loser, 3 to 1, 3 to 1, occasional loser or break even, right? Even better. As you can see, we've already done a break even trade. Now this one here, okay, this would have worked 3 to 1. This would have worked 3 to 1 and even more. So we had 2 break-even ones, and now I'm showing you where you could have some winners here. Let's keep going. Let's look at another one. And before we analyze this one, let's take a look at ES. Okay, ES is trying to break through. Now look, see these wicks here. Okay, it got up there before it sold off. So let's just be careful. Let's just watch. Let me get this one up about right here for an alert. Although my alerts have not been going off. Thinkorswim is just not my friend. Okay, back over here. So where are we at here? This is Euro Yen. So now we're looking at a different one, and it is blasting to the top side. So let's just do the bigger view. Okay, bigger view was we were sideways, and now we're in an uptrend. I'm going to pull it down so you guys can see it a little bit better. All right, so we go through our checklist. Currently, is price above? Yes. check. Above average volume, yes, check. Momentum to the upside, yes, check. 10 above the 20, above the 30, yes, check. Are they widening? Yes, check. All right, so pretty much everything is in our favor except the one thing we have to be cautious of is what? Exhaustion. Because we're moving at an almost 90-degree angle up, at some point, price is going to exhaust and pull back. So we're going to look for an entry on what? The pullback. And again, all you got to do is look at previous price action. We get away, we pull back. We get away, we pull back. We get away, we pull back. Then we ranged. You see this range right here? Okay, so you're looking for a good entry. Draw your line right across the top of here. Move it up. Right there. Okay, so if you're looking for a good entry when this started to go, all the factors were in your favor. Now, if we would have been here, right? If we would have been looking at this time, we're ranging, and then all of a sudden we break out. We have above average volume, and you can see what happens. Let's look at the move. Let's see. So we would have entered here. And as of right now, it's went... It's went 20 pips. So it's went 20 pips so far. 20 pips. Actually, more than that. No, that's right. That's right. Yeah, it's went 20 pips. That's a good move, right? We like that. Let me get rid of this. When you're micro scalping, 20 pips is golden for one trade. Right, for one trade. I mean, typically, I'm a little bit different. Again, there's micro scalpers that if they think they can get 5 or 6, that's all they look for. Then there's other guys, I'm one of these guys, I'm sort of looking for trades that are going to give me 3 to 1. So my trade's going to be dependent on where my stop needs to be. My stop would probably be right there. Draw it in to make it easy for you. Under this candle. So right here would be my stop, and that is 43. That's a 5 pip stop. So I would have to know that I could get at least 15 pips or feel good about it, right? I have to feel good that based on previous price action, let's come back over this way, all right? Okay, right in here, it broke right through it though. And that's why I'm saying, you're not always going to... Oh, I'm trying to get to... Let me get back over here. Yeah, okay, so you would draw like your rectangles around here and then around here. You drag them across. I'm just going to make it easy by putting a line across here. Pull that up. About there. And then the other one would be right about there. Okay, so now we can squeeze it in. Go back over. And then the next one would be up here. All right. I'm trying to not take a ton of time. So the next one's going to be up around there. Then the next one's going to be up around here. And it's still going, right? It's still going. So, coming back over here. If I'm entering here, now I know, look at this, rejected, rejected, so it might be more likely that it's going to get through this time. So from where I would be entering, which is right here, can I get 3 to 1 to right there? Yes, that's 16, and I have a 5 pip stop. So to the next likely, even though it blasted right through it, the next likely area of resistance, can I get my 3 to 1? Or if you're only going for 2 to 1, can you get your 2 to 1? Can you get your 3 to 1? If the answer is yes, all the other criteria was in our favor. Momentum was up, above average volume, trend is up, Price is above the moving averages are widening, everything, all factors were check, 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 and look how highly probable this trade was. That's what you're looking for. All right, let's go back over to ES real quick, and then we're going to wrap this up. Okay, so ES broke above. Okay, looks like we might try to get a little retest here, or just be careful. You're still in this wick right here. You see this? When I say we might get a little retest, we could see a little retest and go, or at some time, this is a pretty big move, we could see some exhaustion back towards the 10. So just be careful there. All right, so before we wrap it up, it's 11 o'clock. Does anybody have any questions today? Okay, we did the 3 minute. The 3 minute, obviously, as you can see, a little bit slower, right? Because each candle's 3 minutes. I prefer the 2 minute. I think it's a good, well, it's in between, right? 1, 2, and 3 is what most microscalpers use for their time frames. I like the 2 minute. I think things happen fast enough, but not in a chaotic fashion. All your patterns, like when we saw the double top, when you get your hammers and your shooting star, they're all going to apply on any time frame that you trade. On any time frame that you trade. Does anybody have any questions? Hopefully you're seeing what's running through my mind. You're seeing how I'm marking, like right here, where we're going to have an entry, right? Where I'm going to put my stop. And then the same factors that we've used the past 3 days are what we're looking for. Where's the trend? Up, down, sideways. Is price above or below the trend? If the trend is up, we want it to be above it. Okay? Are the 10, the 20, and the 30, are they widening? Is the 10 above the 20 and the 20 above the 30? Do we have above average volume, and do we have momentum going in our favor? That's it. That's what you're looking for. It's a simple list of 5 or 6 things. I've been showing you how you can draw in these areas, like right here, so you know where you're looking at entering, and how you know where you're looking for likely targets. Okay, it's not complicated. We'll continue to do this until everybody feels like they're starting to get it. Like I said, I've had a lot of positive feedback about this. Folks in my room, both in the room publicly and DMing me like, oh my gosh, I never even thought about microscalping. I love it. I love it because they're shorter, higher probability trades, really easy to manage, really easy to figure out. And for like one person was telling me, the reason they like it and they never thought about it before, so most people don't think about scalping because they have maybe a full-time job, right? They work 8 to 5 or 9 to 5 or whatever the case may be. But because you can microscalp Forex and Forex trades 24 hours a day, this person's like, hey, before I go to work in the morning or when I get home in the evenings, I can microscalp for an hour or two. And if I make, 20, 30, 40, 50 pips, that's awesome. I got like a little side business going on, making that supplemental income, right? That is what's great about microscalping Forex. Okay, from Sunday evening until Friday evening, it's open 24 hours a day. You just pick out the pairs that you like and you go through in whatever time of the day it is. And now there are times of the day, and we'll cover this in later live streams. There are times of the day when you're going to have more volatility in certain pairs, okay? Because different markets are open at different times around the world. And we'll cover all that in upcoming live streams. But you can trade 24 hours a day. So like that person was saying, I never thought about scalping because I work a full-time job, but this micro-scalping Forex, I can do it before work, maybe for an hour, and then I can do it in the evenings once I get home from work for an hour or two. And, who knows? Who knows what you could make, right? And it's so easy. It's so easy to manage the trade. It's so easy to find highly likely things. And I showed you today how you can manage your trade to where you're going to significantly reduce the amount of losers you have. So you'll replace those losers with break-even trades, which is even better, right? Okay. Any questions from anybody? I don't see anything. Thank you so much for joining. Again, if you're brand new, you know what to do. Give us that thumbs up, smash that like button, subscribe to the channel. turn on your notifications bell, do all that because that's going to help us with YouTube. And then come join us in the room, simpletradinglife.com. Click on the free chat room button. 100% of our content is free, and we cover everything. We cover ES, or futures in general, but we cover ES, we cover forex, and we cover equities. I give a morning watch list on equities every day. We teach price action trading. We teach different strategies. So just come join us. It's a really low-key group. We're now up close to 410 members and growing all the time. So again, thank you for joining us, and we'll see you in the room. Bye-bye.